And there you have it. The markets are officially closed on this Wednesday, October 8th. Welcome, investors and traders. And congratulations to all the silver and gold stackers. Boy, do we have a lot to talk about tonight. And with me, we have Nod from our Nod Live newsroom. Many of you know Nod through the live feed that you get. And if you're looking to get dynamic news that you're probably going to get ahead of Bloomberg even this week, Nod posted very pertinent and relative trading information and news to our members. And Nod, I don't know what the beat time was, but it was like 20 minutes at least. So
it felt good. It felt good. Thank you.
You're right on top of that. So I'm going to bring Nod in right away to talk about the current events and some of the economic news that's pretty lacking with this government shutdown still going strong. I saw a video on YouTube of Chuck Schumer, and they're calling this the Schumer shutdown. Boy, he's getting brutalized with the sombreros and mustaches, but he's digging in. He is just telling the world that he's not going to move until the GOP, at least meets them. But the GOP doesn't need any of their consent, doesn't have to concede at all. And so this could go on for a while longer. And Nod, you mentioned last week how much this is going to cost the GDP.
Right.
Fraction. What is that per week?
It's between 10 and 15 basis points for GDP, which it doesn't sound like a lot, but if this thing drags on, even if it's for let's say 2 more weeks, that's pretty material to the GDP that we're fighting so hard to repair with the debt that we're carrying and with the jobs that we're losing and with the interest rates that we're trying to correct. So it's a kerfuffle, and the timing of this is really terrible.
And that's on a weekly basis that right. Calculation was derived from, right? Is that right?
That's correct.
Yeah. Okay. So what else do you have to report? And then we'll get to the big story. We'll get to the precious metals, and maybe we'll talk about some of the critical metals and mining companies that we participated in last week. Hopefully the viewers out there had a chance to watch our report, and I put out a list of the ones that we're watching, and boy, do we hit some home runs. In fact, the CRML, we'll talk about that a little bit when we look at the charts, but that was the home run trade of the week. So I'll be reporting more about that on Friday. But what do you have to share with our viewers tonight?
Well, I appreciate the kudos, and I want to welcome everybody. Thank you again for taking time out of your really busy life to join AJ and me and the crew with us for this live midweek report. We hope everyone enjoys it, and thank you for joining us on the replay. Listen, the big bugaboo in the room really is this government shutdown. And, aside from the impact that it's having on GDP, we'll know that down the road. But again, we're not getting data, and the big issue is the Fed is going to use data for the next policy shift. A lot of people are counting on the Fed to make a cut, but if they're flying blind, we don't know what they're going to do, and the market does not like uncertainty. But the big spillover and instant impact that we've seen so far has benefited us in a big way at StickyTrades, with gold hitting $4,000 an ounce and silver charging near $50 an ounce. And I just want to pull up this article. And I know AJ doesn't like to toot his own horn, but if we can look at this, back on January 27th, AJ put out an article on Zero Hedge talking about a cup and handle formation pointing towards a $50 move in silver. Now, listen, AJ was on a lonely island when he put that out there. He stuck his neck out, and lo and behold, now we've got a lot of silver bugs. Again, this is not to toot AJ's horn, but this is to show that the technicals work. And given the situation that we're in, we're seeing a lot of flock to safety. And gold hitting $4,000 an ounce and silver hitting $50 an ounce has been the big benefactor. AJ, would you mind just having a deep dig into one or both of these? Because I've got some cool data to follow up with what you're going to say.
Well, I pulled the chart out of that article so I could show our viewers here some more details about what's going on. And, many of our members already know that I like to trade the completion of the handle in any cup and handle in any time frame. It could be a monthly, 55 month candle here, a 55-year candle, monthly candle. And that's what I was basically drawing from with regard to setting the forecast. Now, most recently, I did put my neck out a second time, and I put the target at 50 by the end of the year. And I even said that we could see it sooner than that. So it looks like we're only the highs on on the futures for the contract month was just, I think, pennies away from hitting 50.
Yeah, the high 49s.
Yeah, and so, I think we got a lot more to go. And let me just, again, focusing on this chart here, let me draw some pictures for you. Now, remember, when you're looking at cup and handle, to measure the target price after a breakout, you take the depth of the cup, okay? And you take the depth of the cup, which in this case is going to be $45, and then you attach that to the breakout point, which is going to be around 50. So if we break out and sustain levels over 50, I'll write another report and put a $95 price target on silver. And I already have a higher price target on gold at 4,200, and I think that's going to hit because we broke out of the channel. And we used that as an example on the Technical Tuesday video on how to trade channels. So if you didn't get that one, go back to yesterday's video and get a refresher on that. I really, I don't know, maybe we're not promoting it well enough, but the Technical Tuesday videos are going to be the most valuable videos moving forward because they'll never get stale. See, we put out a report like on a Wednesday, or we put out a Friday weekly market report. We're talking about current events, current prices, and after a month or so, no one's ever going to watch that one again. But the Technical Tuesday ones will be watched over and over again for many years into the future. And so we're excited about that. So if you're not plugged into the Technical Tuesday playlist, go back from the very beginning. They're only 10 to 15 minute, very short videos that I would say and I refer to this in the video itself as your weekly technical analysis vitamin. So when we're looking at silver, I think that's going to be pretty interesting. Here's what I'm talking about. This is the actual chart of the silver futures December contract. And as if I look at the daily, it just looks like a nice steady upward trend, right? But when I back out and I look at the monthly, going back as far as I can, you can see where I drew that chart from. So here we are. I put that dotted line there at 50 a while back, and here we are very close to hitting that. Today, the futures contract got up to, what's that high right there? That's 49, was that 49.50? So it's only 50 cents away from hitting that target. And I think tomorrow we will. But here's the big caution flag. There are going to be a lot of sellers coming in there saying, oh, we've arrived, we've hit the target. And you will get profit taking. I can almost guarantee you that. But I think it's going to more or less bounce around in a sideways pattern as the general markets and institutions and even some of the banks that are really sweating it out now, as they decide what they're going to do, whether to short more of it to push it down, or they're going to start covering their shorts. I really thought the short squeeze was going to be down a lot lower, but it didn't happen. They were very resilient and sticking with it. But COMEX is running out of silver to loan out to the short sellers to rehypothecate. They can't do it. And even SLV is running out of shares. Nod, you had a report on the number of shares available. It was only like 15,000 or what was it, 18,000 on SLV.
You're right. They're not available to borrow, so it's very thin. If you have a negative view on it, and that's providing us a nice floor in the price of SLV, let alone the price of the metal.
Right. Now, what was the source from that one? Because you even had you put that one out pretty early before the rest of the media did that to our VIPs first. I know.
Well, that was from the regulators. I mean, they post the float and the short availability each morning on most of them, and that popped up on our screen because, again, whenever there's a short float or a difficult to borrow, people tend to seek that out pretty well.
Right. Now think about this. For the investor types that are going to buy and hold, not the traders per se, but the buy and hold investors, this is extremely good news because think about it. It's like they're putting a restriction out there not by choice, but just by design. They have no choice but to restrict the number of shares allowed to short sell. So if they put the brakes on the short sellers, there's no one left to put a lid on the price to push it down. They can't. So the only other choice is that the short sellers that are left out there are going to have to cover. Otherwise, they're going to get smoked. And so when I back this out and I say, okay, well, how high can this go? Well, I think it could go up to 95. We're talking, and it's not going to go straight up, but I think you're going to see it right up to these levels. And if that happens with silver, you're most likely going to see the same thing happen for gold. So I was looking at /GC, which is the gold futures, and this is what I used on the Technical Tuesday video. I showed the channels, and just as a quick refresher, and Nod, you could jump in here and take any ticker symbols you want from the audience. Maybe you could do the same and look at the channels. But when a channel is broken, you basically take the width of the channel and you add it to the breakout point, and that becomes your next target. Okay. Now, if the next channel in this setup here in this pattern breaks, you take the same width of that previous channel and you attach it to the new channel that you've drawn parallel to the previous channels. Hopefully I didn't lose you there. But when you look at that and you say, okay, well, where is that new channel line bringing us to for gold? Well, it's up there around 4,200 right there. And so that's why I'm pretty convinced it's going to get to 4,200. Now, I was watching Peter Schiff more or less celebrate and kind of sticking it to CNBC. I don't know if any of you saw his post on X, but he was really giving them hell because in 2014 or 2015, he made a prediction that gold would go to 5,000. I don't remember what his time frame was, but he is bringing it right back in their face because after he put the target on gold at 5,000, they never invited him back on air to talk about gold. And now he's like, he's going to be like the Tom Lee of precious metals. Once it gets to 5,000, every network's going to want him on board to talk about gold for sure. No doubt about that. In fact, I have a contact to Peter Schiff. I would love to have him on one of these live broadcasts. That would be a hoot for sure. Yeah.
Well, listen, AJ, I want to continue just with gold for a little bit more because again, it is a safe haven asset. I just want to pull this up because again, it's having its best year since 1979, up 50% again as a safe haven asset. But what I find interesting, AJ, is that the IMF said that they're going to have their goldings make up over 20% of their global reserves. Now, they certainly didn't say that when gold was trading at 1,200, right. But now where it is, they're happy to boast that. So you see this combination of a flight to quality in the metals, but what we're not seeing a flight to quality in is in equity. So I'm going to pull up this chart right here. I would like to talk about the move that we had off of the April lows. We saw there's a quality index right here that I'm showing. Names of quality have lagged the high PE names by more than 10 points, which is really similar to 1999. So AJ, while we've had these gargantuan moves in the overall equities, they have been in names that are the high PE, and they've kind of thrown out the quality names. Going back to some of the quality names, would you mind talking about some of the miners, AJ, which is like Newmont, AEM, or Barrick, because I think that will help people give an opportunity to get into this without missing the boat, because there's still some really quality names left.
Well, let me throw one out that our members don't know about, but yeah, I can't post every single trade that I do, but I have been talking about AG, Pan American Silver, Barrick Gold, and such. But this is one I picked up around the $14 area. It's MUX. All right. It's McEwen Inc. And I would, if you're a silver trader or swing trader, it doesn't matter. I would keep this on your watch list. And this is one that once I sell it, and I haven't yet, but once I sell it, I will be parlaying this one as well, like I do with SLV. Why? Because when silver starts breaking out and screaming on the cup and handle breakout to going to $95, you're going to have Uncle Joe and Aunt Sadie and all your relatives and neighbors trying to find the cheapest road to get this money in the bank from silver, and they're not going to be buying gold at $4,200 an ounce. They're just not going to do it. I'm talking about the average person who's not necessarily a trader, but maybe a FOMO wannabe investor, right? So they're going to go out there and look for some of the cheapest stocks out there. AG is one of them, but MUX, look into this in the fundamentals. This is a mining conglomerate, if you will, and they are on the move. Now, when you look at this one on the weekly, it's already broken out of its cup and handle. Here's the cup here. Here's the handle. Now, I was a little late to the party on getting in on this at 14 right here, but I got on that because of the weekly bullish engulfing candle. So I figure, all right, well, sometimes when it gaps up, it'll pull back to the gap fill point and then start to do another rebound to the highs. But it didn't do that. It just immediately showed a bullish engulfing. So I got in there. Now, I am looking for a point to sell this, but I don't want to do it while silver is getting ready to break out of 50 because the whole industry is going to light up again. And then all your relatives are going to start calling you. So, where could I buy gold? Where could I buy silver? How can I make money in this? And you can be careful not to give them advice because they might sue you. You never know. Some family members will do that. But when you look at this on the monthly chart, this is where it gets really interesting. Look at that. It puts it in perspective. So if this continues, pulls back, I'm always going to be always is a big word, but I'm always going to be trading that on the dips. And my next short-term target on that is going to be up there around 45 to 50 because this is a rounding bottom, also known as a saucer bottom. You may have heard me quote John Murphy from CNBC from years ago, but a saucer bottom or a rounding bottom is extremely bullish for the longer term, not for trades, but for long-term investors. So I think this is going to be one of the better ones to keep and trade. And then if you look at AG, like we mentioned, and not be ready with more ticker symbols if they're coming in on the chat.
Yeah,
I don't mind. I don't have my chat open here. There we go. But AG is up there where MUX was when I first bought it. And look at the volume increase here. So AG, I think, is another one that's good to keep on your watch list. The only difference is that this is getting vertical and it's already at a resistance area up here, so, and you can see on the monthly, although we're only in the first week of October here, we have a drop in volume because we're not through the month. But I don't think October is going to beat the September highs in volume. So I think you could see a little bit of a pullback here or a correction. So be careful with that. If you're going to get long any silver, gold, ETFs, or the like, I would say make sure you're trailing your stop up using our 1% rule for managing risk, and make sure you stay tuned, especially you members, to the rapid fire session. Oh, by the way, Nod, I can't help it. I'm going to give a little bit of a sneak preview.
Oh, here we go. This is nice.
We're going to be doing now, folks, especially those who are not members yet. My philosophy has been to look at the technicals and basically weigh the evidence between the buyers and the sellers. Andrew Faldi on our team has built an algorithm that we put into a web platform here for our members to use to determine if these are star favorites. So let me just use, what can I use? I'll use BTU because I put out a bearish position to our members. So you put the ticker in there and it takes seconds to come up. Then you scroll down and there's your nice clean chart. Now we still have work to do on this one. Hopefully you folks are liking. We getting thumbs up in the chat? I don't know. I don't see any thumbs up yet. Well, there's a delay there. But anyway, it gives you the pivot points, green arrow, red arrows. It's analyzing the oscillators, but then it puts it into the checklist. You see this? Now, the way we have it right now, it's not dynamic because we're still in testing mode. But when we go live, see the pattern recognition for today. If you look at this one, it did have a full pivot. So there would be a red bearish check there, which would give us a straight line down on the bearish indicators, which would qualify this to be a star favorite. Now, as we're testing this, I'm finding that not all of the stocks that our members give us on the rapid fire session are going to be star favorites. And those are the ones I like to trade. I don't want to push the trade because I like the company, the CEO, the product, service, whatever. I want to make sure the technicals are backing it up so that we don't make any mistakes. And that's how that's how and why we're getting such a high percentage of hits on our trades. Because if you go back and look at CRML, which again is going to be the trade of the week, we got in on this one on this green candle right here, and our algorithm was showing this to be a buy, and 2 days later the thing just screamed up, and a lot of our members got out on this big shadow candle here, and took a huge profit, especially the equity traders. So that's what we're doing. We're going to be rolling that out. So we got a lot going on at StickyTrades. We're rolling that out. We're rolling our CryptX room, which, by the way, if you're not enrolled already, maybe you could put a link to the webinar on Friday, where
Yes.
Matt and CJ are going to open up and introduce their services to crypto and how they trade it. And you'll be able to participate with them just like you are with us, with asking them about ticker symbols, looking at the charts. They're very qualified. They're professional traders. You're absolutely going to enjoy that 1 hour session. So don't miss it. It's going to be the first of the free webinar that we have. I don't know how many they're going to put out for free, but that one will be one you don't want to miss. So, yeah. So what do you got left? Well, I know the time gets so short. We only got 9 minutes left before the bottom of the hour, but what else do you have on your list? So what do you have coming in from the audience?
Well, we've got a lot coming in for the audience. Let's do a couple tickers, and then I'll pack some news in. We've got a couple of people that are looking for some tickers. AJ, would you mind looking for TT? Would you look at REGN, please? We've looked at that for a while, but yes,
oh,
please.
this goes perfectly with the Technical Tuesday video that we put out, because if you look here, this is a very well-defined trading channel. So when you see a stock that's going up, or you can look at the moving average, if it's going up, then you have an ascending pattern, ascending channel. And so you take the lows, you draw the trend line. You don't, for the engineers out there, you don't have to be so exact with connecting all the exact lows. You just pass through the lows, and then it didn't do it, so I have to do it again. So you connect the lows to make the trend line, then you drag it up to draw a line parallel. Now, would I be buying this right now? Probably not. And the reason why, we don't have a pivot, and that's very important that you get a pivot, because if it breaks out below that channel, what do? Well, it's most likely going to go lower. So how do you figure out the downside target? You take the width of the channel, you drag it down to the breakout point. If you're not careful, this thing could drop down to 510. I don't know. I wouldn't be buying it yet. However, if it does bounce off of that channel line and you got an increase in volume on the green candle, it could go all the way up to 620. Now, this is a great one for option traders, especially if you're following the signals, but you got to be very careful in managing risk on that, because it will absolutely bite you if you hold on and say, I'm just going to hold on until I get back to break even. That's not going to work for you. That's not going to work at all. So
all right,
anyway.
thanks, sir. What about HPQ for our old friend Rob Indy? That's always a fun one to look at.
Hewlett Packard. All right, let's go look at HPQ. I would buy that one. Now, let's throw that into the. It's only going to give yesterday's data, but let's see what HPQ comes up. And this is where the tool is going to become very, very valuable for our traders. So here you go, right? So this is from yesterday. It's bouncing off supports. Stochastics are oversold with a pivot. Gap is above the market. Pattern recognition is already checked. We would be looking for a drop in volume on the way down. So the only thing that's making this, see, we didn't get a drop in volume, but we got very close to a bullish engulfing. So I would discount that, and I would still go long with that, because you got upside potential that could bring it all the way up to 28.5. Now, it doesn't look like much for some folks, what's $1.50 on that. But if you're an option trader, that could work out very well. Buying the Januaries, what I would do is I would go and buy the $28 calls at 160. Telling you what I would do, not what you should do. I'm telling you what I would do. I buy that at 160 and look to sell it around $2, because if it goes up $1, $1.50, it's going to be trading very close to where the $27 calls are trading now. So that could be a nice little return for Hewlett Packard if you're an option trader, especially. Yeah. What else you got? I love to. Now, this is a sneak preview of what we're going to be doing tonight from 6 to 7. So we do this every week. We go over at least 50 stocks, rapid fire, throw some strategy discussion out, some option trading out there. It's something for everyone. And we really enjoy doing this. If you haven't picked up on that energy, then you probably won't ever pick up on. We get really pumped up about this, and that's why we're doing so well with our members as well. So what's the other ticker?
I got one more ticker. Let's go APP, App Love, and this one has been a rocket ship. It's been like, I call it a cat in a bathtub. But
well, this is interesting. Yeah, I don't know who submitted that one, but thank you for that, because last Wednesday, this was last Wednesday. Oh, wait, hold on. This is Wednesday, Thursday, Friday. Now here's last Wednesday, Thursday, Friday. Yeah. So here's last Wednesday, and I put a downside target on this at 621. And so now it will actually hit on Monday, but I think now you're getting a pivot to the upside. So I'll do this for the viewers on a live broadcast. I would go up, and I'm not going to go up big because I don't think it's going to go all the way up to the high level, not with the way the markets are right now. But I would put an upside target on that one at 682, which, yeah, you're talking a good percentage and point gain there. But I would go up and down. Now they had some bad news come out. What was the bad news, Nod? You posted that through the Nod Live news feed as well.
Yeah,
weren't they being investigated or something? Or?
There was I believe there was a leak, and they guided down to kind of hedge themselves during that situation. So anytime you guide down in this market, if you sandbag, they're not going to take care of you.
Yeah, but we saw the same thing happen with UNH, and the fact that it has this long shadow at the end of this candle here after bad news, that's actually bullish. So I would still lean to the upside. Now, for the option trades, what I would do, I would probably sell some far out of the money short-term put spreads and try to take in good percentage. So I would sell like the 585, maybe the 585, 580 put spread in October with 9 days to go. And what does that look like? 585 to 580. Yeah, for 90 cents, you're getting 18% return if it works out for you and stays over 585 over the next 9 days. That's a pretty high probability calculation there. So that's the way I would trade that one.
AJ, time is just flying. I'd be remiss if I didn't bring up Bitcoin for two reasons. One, we have gained two great colleagues in Matt and CJ, which again, their free launch webinar is this Friday at 4 p.m. Eastern. The link was posted there. Please join. Please support them. You're going to love what they're going to offer to our crew. It's going to be an amazing addition. They're incredibly gifted with what they do, and they're just, like I said, we're really happy to have them on. But AJ, Bitcoin did hit your upside target.
On Monday. Yeah, on Monday it did that.
So where do you see things right now with regards to Bitcoin?
Well, it's interesting because it hit my target right here. And then on Monday, I saw the increase in volume on Friday, but then we didn't have the increase in volume on Monday. I don't know if you could see that. Let me zoom in. It's a very slight drop in volume. And then it was followed by this bearish engulfing candle, which is now being conflicted with a bullish Harami. Now, here's what I think. I'm not going to go bullish on it, but I think it could make another test of the high from Monday if silver breaks out of 50 and gold goes on its way up to 4,200, because I think that's going to be brought along with the precious metals markets. That's what I think we're going to see. But I would be very, very careful with any new long Bitcoin positions, because if you look at the weeklies, that is a very close to a shooting star, and the CCI is already overbought. Now you can see that the trend is still going up in the channel, but it could pull back to the middle or even lower end of that channel before bouncing, and that's how I would play it. So, Nod, that is pretty much it. And I want to thank all of our viewers. I hope you're enjoying this. If you are enjoying, hit that like button. You know how to do that. I don't have to tell you. But the brand new folks, hit the little subscription bell. You'll be notified when the next session where we go live. You'll be notified when we get the weekly market report out, and also Technical Tuesdays. As long as you stay plugged in, you're going to have a safety net under you, at least showing you how to manage the risk in the way you trade. I can't tell you what to do, but I can tell you when to get out when things start to go wrong. That's for sure. All right, folks. Thank you, Nod. Thank you, Anthony, in the back
Thanks,
room.
man.
And you all have a good rest of the week. Take care.